The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. And just wanted to remind you, make sure you check out our show also on your mobile phone. Anytime you're away from your PC, you can listen to us at tfnn.mobi. Let's check out where the markets are at today. We have the S&P is down 2 points. We have the Nasdaq up 5.5. Russell's currently down 1.8 with the Dow down 6 points on the day. Most of the markets there running up and filling in their gaps. So we'll talk about those gap plays. So a lot of cool ways you can take advantage of those. And Nadex is the best way to trade gap fill plays. And we'll go over that a little bit today. Gold right now down 6.3. We got silver. It's down a little bit, down 0.3 on the day. Looking on over at copper, it's basically flat. It's up a little bit, but not much. We got oil is definitely a mover today, down $1.33 down on oil. We got natural gas, it's up 0.67. Corn is down $1.25. Soybeans down 7. Euro dollar is down 45 pips. Pound dollar up 67. Had some nice moves on that last night for a good strangle trade, potentially even a straddle trade you can take advantage of there. We got the Aussie dollar down 25 pips. Euro yen down 53. Dollar yen basically flat on the day, down a pip right now. We got pound yen up 59 pips. Dollar CAD up 34, with the dollar franc up 37 pips on the day. So, first thing, let's go in and let's just talk about these gap fills. It's one of my favorite trades to do, and we'll go over and pull them up, and we'll look at them. It's right over here on the S&P, and we'll just go through each one of the indices. But what you can notice is we got the settlement price, okay? And settlement is defined as the settlement price by the exchange. The CME, what they do is they take all the trades in the last 30 seconds of trading, okay? So from like 4:14:30 to 4:15. And they take every price the S&P was traded at, and they multiply it times the volume of contracts filled at that price. That's a volume-weighted price. They then add all those volume-weighted prices together, and they divide it by the total volume traded in those last 30 seconds. And that's what they come up with settlement. Settlement's used for mark-to-market. It's used for defining option exercise. It's also, very helpful for gap fill plays and things of that sort. Well, you can go in on Nadex and see the hard part about gap fills is sometimes gaps don't fill. So where do you put a stop loss, okay? But with Nadex, of course, you don't have to use a stop loss at all when you trade the gap fills. And I usually use the 4:15 expirations. And I'll go in, I'll look at these trades, and I'll pick basically a strike right around the settlement. So you go in here and you're looking, and I'll wait for usually an upturn. I won't just hop in like on the first get-go. Right here we did have, some price, but I'm looking for, at least like an up-close bar. So, if you go in and let's zoom in a little bit tighter for you. See the market's just going down, 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 down. Boom. Now we finally get an up-close. Now you have a trade. Right around 10 o'clock, you really have the best entry in this case. And technically, you could hop in right at 9:30. I used to do it all the time. Now, a lot of times I'll look and I'll wait for the market to at least move in the direction. And it's also bouncing off a deviation level. That's all good. So all those things combined, put that in. You go in, you target the 1763, you get a great, much better than 1-to-1 risk-reward ratio on the trade that you can take advantage of. And let me see here. I'll show you this. We'll see if I can get it to pull up correctly for me. If I can, I'll show you the actual binary contract, how it changed the price over the course of the trades here. And what do we got? We got the S&P, and we have the 415, and then we got the 1763, literally, the 1763 strike. So it's a perfect strike. And if the chart will open up for me, which sometimes it's hit and miss on these binary charts opening perfectly, but it looks like it's working pretty good. And so we'll go up here, and let's look at it. So I'm usually looking at getting out somewhere around 43. Okay, so that's usually my target price, and you can go in and you can even adjust this. You can make it say mid, bid, ask. So if I was selling at 43, I could say bid right there. So that way I could actually see, it did hit 43. It hit 43.50 on the bid side. And then I could go over here on the right side and I could look at ask. So in the ask, basically, what would I have to have, bought it for? Well, if I would have bought it right at, which wouldn't have been a bad trade, but if I would have bought it right at, 9:30, right there on the open, then I'm looking somewhere between 15 and 20 bucks. So if I can buy for 15 or 20, I can sell for 43 if it goes back up. That's a great trade. I got a 1-to-1 reward to risk ratio. It's an excellent setup. It comes on down, and like I said, right there, we're looking over at the chart here. Get that first up close right around 10.10 at the close of 10.10. So we can go over here and go, okay, what price would I got if I would have waited for that up close? Could actually got in somewhere between like $8 and $12 on the trade to buy it, and then sold it at 40. So you're looking at like a 300, almost 400? Yeah, 400% return. So nice return on that trade. Just depending upon exactly what price you got in at, but actually I guess any price would be a 400% return because if you sold up there. If you bought at 8 times 4, so make a nice profit on the trade. But, despite the fact you should have at least a 1-to-1, 3-to-1, maybe even a 4-to-1, depending upon your exact fill. But 1-to-1 or better is what I'm shooting for whenever I want them. So it flies up, it hits this, just barely nicks it. You got literally 43.50. But again, why do I use the 43 rule when I'm targeting a strike? Well, because this is the exact reason I'll use 43 when I'm targeting a strike. I call it my 43.57 rule. Okay, so if I'm buying, I'll sell. If I'm buying, let's say I'm targeting 17.63, which is settlement. I'm not just randomly picking a number. I'm going for a gap fill. And so I'll literally sell at 43, because what if it gets within like a couple ticks of 17.63? There's nothing like, missing a trade and losing all the profit simply because, it didn't get there by just a couple ticks. And so instead of using like, say, 45, 46, 47, because you got to account for bid-ask spread, I'll use 43. And anyway, so if you hopped in on that trade, whether you did it like right at 9:30 or whether you did it a little bit later, perfect, nice, sweet gap fill. Also, this is really important to be aware of these gaps when you're trading the indices as a whole, because maybe your system is saying go short. You hop in the morning, you got a nice short going on, but you have no idea that there's a gap fill in progress. And as soon as this thing turns around, it literally shoots right for settlement. If you don't know it, you're going to be, behind the game. And so you want to definitely be aware of that. And, maybe you're taking some shorts on ES, but you also could put on a few gap fill binary contracts. That could also help hedge you out in case the thing does just turn around right against you, or it may help you filter out going short. You may be waiting for a turnaround to play that gap fill. So either way you want to trade it. But personally, I really like to focus on those gap fills. So that's the S&P gap fill. And the NASDAQ has just been running like crazy. It's been just so fast at filling its gaps. And but right on over here, look at the NASDAQ is right there at 3377.50. Okay, would have been your target strike. And so we can go back and let me do the same thing. We'll pull it up. And we got 76 is going to be your closest one. There are also, because the next one's 3380. And ideally you want to be targeting the gap. Okay? And so if we go over here and look at it, this morning you would have been buying around 29.30. That would not have been, obviously, a 1-to-1. It does drop down to as low as 11 to 20 bucks, and so you easily could have got a 1-to-1 right before that turnaround. So the same move I was talking about on ES, where market opens up and then we get that nice bounce off a deviation, it closes up. That's one of the many ways to look at the trade. Other ways that I'll see traders do it is they'll go in and they're like, okay, I want a gap fill trade, I want to target 33.77, and they'll just put in like a buy at 20 bucks. And they'll wait for the market to oscillate, get to that 1-to-1, because they want to get that 1-to-1 ratio for it to fill, and then it flies on up. So that's one of the ways to target the gap fills. But and often the market will hit this and just bounce off. But NASDAQ has been going really, really fast and been a great gap fill trade lately. And other ones have worked, but NASDAQ just worked really fast. We got the Russell. We got the same setup. Okay, again, came on down, boom, right off the deviation there. Looking for that bounce, got that volume spike. There's a lot of things going on with not only the volume spike, off the deviation level. You got the gap fill going on. a lot of different things in your favor. We can look at we would look at the 11.05, right? Because that's the settlement price. That's what we're going to be targeting, not the close, not the last, but the settlement price. So in this case, we had to choose 11.04. Okay, you could have chose 11.06. That is, an option that you could have looked at. But like I said, I would rather err on the side of caution. And if we look over at that, then what you'll see, right here's you came in and couldn't have got into it right in the open. The risk reward wasn't there, but it dropped down, started it back up. There you go. There's your trade right at 10 o'clock. You got a nice entry for a 1-to-1. It flies up easily. You get your $43 fill on the trade. So great, another trade right there, 1-to-1 or better, maybe 2-to-1, 3-to-1. And the last one, let's go ahead and check out the Dow. Dow's been a little bit slower lately, but let's go ahead and look at it. So it seems to have taken more time than a lot of them, but doesn't make it bad, just seems to be a little bit slower on the fills. And we're going to be targeting, the strike over here we're going to be looking at is going to be 55.75. Okay, so you got to go in and find a 55.75. We have the exact 55.75. Again, I used the 4.15. You could use a sooner one, but you don't know how long it's going to take to get there. And so I like to let the trade have all day to fill that gap. And it just increases my probability of having a profitable trade. Market comes on down. Of course, 9:30, again, that 1-to-1's not there. It does run down. You get down to a low. You would have had to have an order pretty much sitting there. A low of about $24 on the trade to buy. And the sell at 43, that would have been close to a 1-to-1, not exactly a 1-to-1. So that one you could have got into. I know some traders that actually did trade the Dow this morning, the gap fill on that, but it wasn't the full 1-to-1. If you would have had the $20 order sitting, you wouldn't have got it. If you had a $25 order sitting, you definitely would have got fill on the trade there. So anyways, but I just want to show that to you. It's one of my favorite trades, especially down gaps right now. With all the Fed intervention and everything going on, down gaps has had a significantly higher fill ratio than up gaps have had. So I do prefer the down gaps whenever they happen. Doesn't mean I don't trade up gaps, but I like them. And when I'm saying gap, if you wonder what I mean, let me show you basically what I'm talking about here. We'll go in, and let me choose the regular trading hour session. Right there. And see, this is where basically the market closed, right here, except for, again, we're targeting settlement as our exact price. And then it gapped. Meaning between the close and the open of the pit session, there's a difference in price. And the reason that matters on the indices is because there's all these stocks. These 30 stocks have a bunch of orders, a bunch of limit orders sitting in there that haven't been filled yet. And the market likes to fill orders. So it's going to go to where the orders are, which are going to be inside that gap, and that's why those gaps fill so often. Stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome here to the Diagnostic Trading Hour. And we're talking about gap fill plays, how to trade gap fills. And we're talking about, basically going in and just choosing the 415 binary at the settlement price, looking for a 1-to-1 or better risk-reward ratio. And, any other, tips and tricks along the way that we can take advantage of. But one of the things I was showing you was right here, I was looking at this during the break, is also notice we have this volume spike right there at 20, 1230, then 1240. So the spike being, right in the middle of that at 1230. And when you have that volume spike, that's a good clue. Market may be done, okay, because usually you get a reversal or chop right after that. I use these all the time. I call them deviation spike trades. And I'll go in, and whenever I get a volume spike at a deviation level, then I'll look at doing an in-the-money binary. So I'll look at selling binary just right above. So if we're at 15,589, then I'll hop over and I'll find the binary that expires just, above that price, and as close as I can get, usually, like in this case, like say 560 or whatever, but you'll find basically it's the closest one you can get for doing these trades. Let me see here, and there'll usually be like a tick or two off of that, but if you do that, you're able to put on the trade, and then like for the 1 o'clock expiration, because it's so close, in this case especially, it's really great, it's so close. You can go in for the 1 o'clock expiration, bring in, say, $20-$30, and just letting, time take care of itself. So you had a gap trade right there, that nice gap reversal. You also basically got a volume spike there that helped you, say, hey, wake up to this gap. And then you had another volume spike at the end of the run where it filled in the gap trade. So both of those, you got an out-of-the-money trade right there. You have an in-the-money deviation spike reversal trade right there. And so there's a lot of cool trades, a lot of setups you can do. And, not a lot of risk in the process. And you can go over and, whenever you see those spike reversals, you can check different time frames. You can check different markets. Russell had the exact same volume spike right there at 12:30, right as it hit settlement. Why did it have that volume spike? Because there were so many orders right there up there at settlement. Remember, the market moves to where the orders are. And it had that volume spike where it took off and worked on filling in that gap. Had that volume spike when it stopped right there at the settlement. So those volume spikes are huge. You start learning to see those. You'll see them everywhere, and you'll see the power of the simplest volume pattern that exists, which again is just that simple volume spike right at deviation level. And settlement does count as a deviation level. And so we see the same thing there on ES. And we can go over to NQ. We'll see if it lines up on all four of them. Yeah, we got it on NQ as well. So, and not all of them had it like right there at 10:10. But two of them had it on 10:10, but definitely for that exit, we had that volume spike right there, and that was actually after settlement. You would have been out of the trade anyway by this point. But again, just one to be aware of. Usually, we expect the markets to chill out or potentially reverse when we see a volume spike at a deviation point. So, hopefully, you can start putting some of those pieces together. Help you out with some gap trades. Help you out with some contrarian reversal trades, and that's some of the things that I'm looking for when I look at various trades in the market. All right, what else do we got that we can go over here? One of the things, of course, is we had some news. So, and of course, as you know, I like to go through the news on the show here and help you get a game plan together for your week and also do a review for those of you out there that traded some of the news trades here, this evening and, yesterday evening, early this morning, and this morning we've had 3 news reports. And one of them, though, I did mention. So last night, of course, I said, hey, we got the Aussie dollar. You can go in. You can do the trade. But, one of the things I noticed is that 67% of the time it moves 50 pips, but the average moves only 45. So a lot of times it doesn't really move that much, okay? And there definitely was some profit potential on the trade, depending on how you played it. It was not a trade. I don't like trading that trade just because there's not enough there. But it's good to know the stats to know, hey, what should my expectations be? So let's look and see, how did the Aussie dollar match up to its average stats? Okay? Now, if they did, of course, change the interest rate to surprise everybody, there would be a massive move. And so that's why sometimes people will go in and they'll play that trade, because, like I said, they do change their interest rate, the thing will just, go to the moon, or, it'll fly down or whatever, depending upon whether they raise the rate, which would increase the Aussie, or decrease the rate, which would weaken the Aussie dollar itself. And so we have, that is one of the trades you can do, and it's just taking a little while for that chart to load up. A little too long for that chart to load up. Let me see here. I'll load up another one. And we'll look at the Aussie dollar. We're also going to check out the pound dollar. And we'll also look at another trade on the dollar yen for a potential butterfly you could have done this morning on the ISM report. Stay right there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. Got a caller, got Mike right here from Dallas, right in my hometown. What's going on, Mike?
Hey, thanks a lot, Darrell. Listen, real quick, to get back on the gap fill, you, as an example, you purchased the NASDAQ and you bought a binary at the approximate settlement price of $33.77, I think you said?
Right, yeah. So we go over here. What I do is I pull up the settlement prices.
Yeah.
So on NASDAQ, we're basically looking right here at, $33.77, $33.78.
Okay.
Uh-huh.
And then when the market reached a low at that time of approximately 33.56, is that when you purchased the 33.77 at settlement, or I'm guessing when did you know there was going to be a reversal?
I was expecting a reversal. Whenever there's a gap, you're expecting it to revert. Okay.
Okay.
So at any time, you're expecting that. But what I'm looking for mainly, there's two things. Is one, I'm looking for a 1-to-1 reward to risk ratio on the trade.
Okay.
So if I would have hopped in, right out of the gate at 9:30 or so, you're looking at about $30. And if I'm going to sell, 43, because that's how whenever I'm targeting a strike, I sell at 43. Then I wouldn't have a 1-to-1 if I bought at 30.
Okay.
Right? So I'm going to look for this thing to pull back, to somewhere around $20, and so that's one of the things I'll do is I'll actually look for that 1-to-1. I'll wait on that 1-to-1 because I expect it to go. Now sometimes I'll miss it because it might be at 30, and then it's at 40, and then the trade's over. You know what I'm saying? But if it pulls, and sometimes it's already big enough at the open. I mean, at the open, sometimes you already have that perfect trade where you can get that 1-to-1. But in this case, it had to pull back.
Right.
I do like it if I can look and just see the market actually do a little bit of a turnaround.
Yeah.
So if you're looking over at the NASDAQ chart and you're trying to, somewhat time it, because every once in a while, of course, those gaps don't always fill, but they fill so often, and since you have defined risk, unlike if I was doing an actual futures contract, then my issue with doing that is, well, where's my stop? How much risk am I going to take on to get this profit, Right. But with the binary, I don't have to worry about that. You could also do a spread, but binaries usually get a little better profit on the trade.
Right.
And so I'll go in, and I don't have to have any stop loss because my risk is, $20. And now I can do 10 of them, I can do 100 of them, whatever. But, my risk is capped if it goes against me. And then as it flies up, then I can take profit on that trade. But, if I can see like an up-close bar or something, whether you're using 5-minute bars or 10-minute bars or whatever bar type you like to use,
right.
That obviously is helpful because at least you're seeing a little bit of momentum in your direction. But you got to combine that momentum with the risk reward. Because if you did it like right out of the gate, you would, like I said, even though you had some upwards momentum, you wouldn't have the risk reward. But then it pulled back, and right at that point, you also start to get that momentum, and that's when you had that risk reward of 1-to-1. So that sort of made it the ideal entry on that trade.
Okay. Very good. Well, thank you.
1-to-1's my big thing, and momentum is my secondary. I'd like to see the momentum if I can get it with the 1-to-1.
Right. Okay. Well, thank you so very much. Enjoy your show.
Hey, you bet, man. Thank you. Thanks for listening. Appreciate it. Okay, cool. Very cool. But, those are really fun trades. I've been doing them for a long time, and I've always, loved trading the gap, but it's always so challenging because that whole risk management issue. But Nadex completely resolves the risk management issue because you can't get stopped out. Your risk doesn't get any bigger. Checking on over. Let's look at the news last night. The Aussie released its interest rate report. And so let's look at that and go into a little bit of detail and put some of the pieces together for you to figure out, what could you have done, should you have done, how should you have played it. And that's what we want to do here. Give me 1 second, and I'll get that all going for us. All right. So last night we had the Aussie news announcement come out, and it was released a little bit later in the evening there at 10:30. So if I zoom in on my chart over here, back up a little bit, we go to 10:30 right here. There we go. So we got 10 o'clock, 10:30, really nothing happening. And then, wait, there we go. So yeah, that's sort of odd. All right, so we got our 10:30 move right there. And right before the announcement comes out, it's basically it's at 9,500. And if you recall, I was talking about the stats a little bit earlier, and we were talking about, okay, what are the expectations we have on this move? And I also did this last night, not last night, but yesterday. I was going through the trade, walking through it sort of step by step for you so you would be prepped and ready. And said, remember, the average move is about 45 pips. But 67% of the time, it breaks 50, which means a lot of times it's not going to quite hit that 45. And so you go and you look at the trade, and how far down did we go? If we were right there, right at 9,500, the low that we got by the, 11 o'clock here, really, we hit that low right out of the gate. Okay, 94.67. Now, if you would have went in and had a take profit, if you were doing the strangles, you could have pulled the trade off. I was talking to somebody last night. We were looking at the 94.60s, and we were looking at the 95.40s as being a potential, straddle trade or even a potential butterfly trade. There's a lot of different ways to put it together. But you would have had to have your take profits. If you did not have your take profits put in, if you were not ready to punch that button the second you saw it pull back at all, then you basically would have got out of the trade at break even on the trade. So, it wouldn't have been a bad trade for you. If you're doing a straddle, you would have got out break even. If you're doing a strangle, if you do binaries and you strangle with binaries and you don't set take profits, you are just asking to lose. Because the market will go down, you'll be in profit, and it reverts back, and you give it all away. And so just make sure that you're definitely setting your take profits on both, but even more so on binaries just because you don't have the wiggle room like you do on spreads. Because spreads, it'd have to expire at 9,500. If you're doing a 9,500 straddle, it have to expire literally right at that price for you to have total loss. And every tick up or below that is less loss, and it goes far enough, then you're not losing on one side, losing on the other, and then eventually you're making enough profit to cover the other side, and you're break even, and then eventually you're moving into profit. So should have at least been a break even or better trade. Like I said, if you did the binaries, you actually could have taken off and had a nice profit on that one. Now, let's go in. Let's look at, we also had some trades. I had a trader send me in this morning one of the strangles he did. Esteban putting that out there, getting ready. He is waiting for the international gates to open up, and this guy is just dedicated to figuring it out. And he has been doing a great job. It's pretty cool. Watching him, learn how to put all these pieces together. He's already a great trader. He's just learning how to apply it to Nadex. And this is the trade he put on. He's like, hey, I'm going to bed. I ain't going to stay up and watch this thing. And trade he put in right here, you can see he did a strangle. He did a straddle right here on this one. And had a nice profit on that one. Let's see here. He went for the midnight contracts. And looks like he got in right at 17. So he got in right before, about 13 minutes before the announcement, and for a $170 risk, and pulled out basically a 1-to-1 profit. So pretty sweet. So that's nice. Like I said, I saw people mess the trade up by not putting in their take profits. It's awesome to see when people do put the pieces together. And 310, and then he basically lost 80 on the other side. Look at that. That's a $230 profit on one side there. So very, very, or net. So great job, Esteban, putting that trade together. And but it's just you got to put the right pieces in, and he put the right pieces together. And I saw guys do binary strangles did well. I saw guys do binary straddles did well. I saw guys that didn't do well because they didn't put their take profits in. They did okay, but they lost on one side or something or the other because they didn't put in their take profit, so they gave up a lot of their profit. Now, the other thing, let's see here. I know that I think he even showed me some other trades he did. Here's the one on the British news that he sent over, so it's pretty cool. So I love it when y'all share your trades with me. That way I can share those with other people and put them out there for you. And just give you credit for doing a good job. And, of course, let other people see, hey, this is possible. It's not just Darrell's trades, right? So these are trades that you can do. And so he went in, and basically before he went to bed, he put on a strangle on the pound dollar and took off a very nice profit. And, you check this out. He didn't want to stay up till 4:30 when the announcement comes out, okay? And so, right here around midnight, hops in, puts the trade on. Market has a nice move. We're at 970, and we get up to, let's see here. What do we got total? 970. And got almost a 90 pip move. It's a massive move right there. What kind of move did we expect? What kind of move did I forecast that we would have on this report when it came out today? Well, last night I said that we're expecting at least a 60 pip move. We got that. And then on the pound yen was the other trade, but pound dollar, it was rocking it. So hopefully you took advantage of that. I don't care if you got in at midnight, 1, 2, 3, or even 4 o'clock. You made money on that trade. Really, you should have made money on that trade. Pound yen, same thing, was rocking it. And interesting thing over here, you would have obviously made, in this case, you would have made a little bit more money if you waited, but it still went up with plenty of movement to allow you to have, just a great trade. You got solid 80 pips if you went in like around 1 a.m., but if you went in, 3 o'clock, you got even more. The thing just took off. But, these are very cool. When you get these nice big pound announcements, you hop in there, it's a volatile instrument, and you put on your straddles or strangles, you put on your take profits, and you go to sleep. And that pretty much wraps it up. So pretty simple. Another trade you could have looked at doing this morning was a butterfly on the ISM report. So, and and then I didn't really go over it, but the pound report that came out, let's see here, the report obviously came out at 4:30. The expectation was 60.4. It came in at 62.4. And let's see, is that right? I want to make sure I got the right numbers on there. 62.5. So pretty close to our deviation number that we were, sort of aiming for. I was looking for ideally a 62.9, but a 62.4 obviously gave it plenty of room to move, and worked out really, really well. All right, so the last one we had there was the ISM, and this one goes out to Mark, and he shared with me one of the trades that he did a little bit earlier on. Let me see if I can pull up that one. I was trying to keep up with all these here. And this is one of the trades he did over on the ISM, the butterfly trade that we posted up there. And went in and pulled out a little bit of nice profit on it. Basically just a range-bound trade between 98.20 and 98.40 on the dollar yen. And before the report came out, and let's see here, got in at 8. It expired at 10. And the report again was at 10. So it expired right on the report there. And let's see here. He went in, put it on, held on to it. It worked out great. You can see it right there. It was really flat. Now, when the report came out, we got some volatility. And not that much. We only got about 20, 30 pips. And we weren't really even looking to straddle or strangle it because it doesn't usually move enough to straddle or strangle it. But we were looking at it as a very good potential butterfly trade going into it. And so it would have worked out really well. And, like I said, there was Mark's trade that he put on where he went in and did, like I said, I'll pull that one up again for you. But here we go. Went in and did a 98.41 by 98.21. Right up here. Right up to it. And 98.21 right down here. And not as wide as he even admits. Not as wide as I wanted. But he got a great risk reward on the trade. So, he's bringing in $20 on one side. He's bringing in like 27 on the other side. So not bad for a 1-to-1. And a lot of times if I'm doing a 1-to-1, I will hold it. Simply because, it's 1-to-1. So I don't have to worry about if it just touches my strike or not. Unlike if I'm doing one that's, not a 1-to-1. If it's lower than 1-to-1, then I got to be a little more careful on that risk management side because I don't want to end up having to win twice to cover one loss. And he did perfect. So great job on that, Mark. Great job, Esteban, putting those trades together. And so those are reports from just the last, 12 hours or so here, I guess, right? Maybe a little more, 15 hours. And that's 3 news trades right there. All of them working out really well. And like I said, I hope you were able to take advantage of some of those. As far as what do we got coming up here in the next week, I want to make sure you do have your plan together. So pull your pen and pad out, get ready, because we're going to fire these off and go into them for you so that way you have the stats. Tonight we don't have anything on the list. Early in the morning we do have the pound-dollar, pound-yen, but it's on the manufacturing production. Only moves about 20 or 30 pips. Not usually a big report for trading. So it's not one that I'm going to do a straddle or strangle on or anything like that. Not even going to try to butterfly it. Just going to just do a regular, trend trading, just expect some volatility. So really nothing happening right there. Tomorrow we have oil inventory. Okay, so that's a potential trade. You can look at that. It's really tricky, though, because it gets expensive on the oil there. The implied volatility comes in because of the inventory report. And then tomorrow night we have Aussie unemployment. Again, not a good straddle or strangle. Just usually doesn't move enough unless it's a massive move. But we do have some big trades Thursday and Friday. So we're going to talk about those, wrap those up for you when we get back from this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we went through, we're talking about everything. We want to get a little bit of a wrap-up for the news coming up for you this week, and there are a few reports you do want to be focusing on. Okay, so first report you're going to have is the UK rate statement. Usually you're looking at about a 80 to 90 pip move on both the pound dollar and the pound yen. 8% of the time it breaks 50 pips. Okay, that's going to be coming out this Thursday, and so you want to, again, be ready for that report. And let's see here. The exact release time, just want to make sure, because I know with all the time zone changes, I want to make sure we're right. Exact release time is going to be 7 a.m. Okay? So, again, 7 a.m. on that report, and make sure you have that piece in place. Also, we're going to be looking at the ECB press conference after the ECB interest rate. So, that conference is going to come out at 8:30. And so the massive move on that, we're looking at about 75 to 80 pips on euro dollar and euro yen, either one. Over an 80% probability of breaking 50 pips. So those are your two big announcements there on Thursday. We also have the U.S. GDP coming out a little bit off schedule. And I can give you all a 1 or 2 on that, but at the end of the day, I'd still be focusing on the euro dollar, euro yen, because it comes out at the same time. So just being the interest rate announcement there, that ought to be more than enough for you. Looking on over at Friday. Friday we're going to have the NFP and unemployment coming out of the U.S. biggest market movers are euro dollar, dollar franc, pound, dollar, all moving on average greater than 100 to 110 pips move, and over 50% of the time, actually 88% of the time, the dollar franc breaks 50, 88% of the time, the pound dollar breaks 50, 100% of the time, the euro dollar breaks 50. So again, all three of those pairs usually moving 100 pips within 2 hours of the NFP release. So there's three of them. And then the other one that I really like is the dollar CAD. It's going to come out at the same time. They're releasing their unemployment numbers and all that stuff at the exact same time as the U.S. is. Okay, so you're getting all the U.S. unemployment stuff and NFP. You're getting the exact same number coming out of Canada. Obviously going to cause a lot of volatility in the CAD. And average move on that high to low is 80 pips. 80% of the time, it's breaking 50. So as a summary for you, Friday morning you got dollar CAD, dollar franc, euro dollar, pound dollar. Basically 80 to 115 pip move expected. Okay, on that 8:30 release. And then you have the 8:30 ECB press conference, and looking for solid 100 pip move or so on euro dollar and pound dollar. Okay, 80 pip move on euro dollar and pound dollar. And on both of those. So do the pound interest rate, the euro interest rate and press conference on Thursday, and then look at the NFP unemployment numbers and Canadian unemployment numbers on Friday morning. Those are your big news trades. There'll be some other stuff like Draghi going to speak later in the day on Thursday. Shouldn't have any impact since he just had a massive press conference off the rate statement. And then also there'll be an Aussie monetary policy statement. As you can see, that'll be pretty muted considering what just happened with the interest rate that just took place. So hopefully you can go in, at least demo those if you don't do them, but they can be some pretty sweet trades, and there's a lot of ways to take advantage of them, get a little bit more creative as you get into them, but just get down to basic straddle. I mean, if you're like, I don't quite get it, don't spend forever trying to get it. Sit down, log in the demo, buy one above, sell one below. Okay? So that's simple, and just dive into the deep end. Okay, it's demo. It's okay. You're not going to break it. And to help you, use the spread scanner. Hop in. This will help you out a ton when you do this. And it'll go up. It'll pull up all the different spreads for you. And you can get access to this over in the diagnostic area of the TFNN member section. All right, well, y'all have a great day. And good luck in the markets. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.